Ready, Sandy?
Go for it.
Awesome. Okay, well, thank you so much, everyone, for joining us this evening. We are going to be learning all about using QuickBooks desktop version for payroll. So, of course, we have Sandy with the host continuum, our experts in QuickBooks. And so she'll be sharing this evening all her tips and tricks. Please use the chat box to ask your questions as we're going through. I'll monitor that for you, and we can also answer some questions at the end if you have. So for those of you who do not know me, I'm Tori Matichuk. I'm a business development coordinator with the County of Bruce, and I work in our economic development department. Specifically through our economic development team, we provide several different types of programs, all about supporting our entrepreneurs, our business owners, community partners, etc. So really focused on that business development part, as well as building awesome communities where people want to live, start a business, grow their family, find meaningful employment. So if you're operating a business in Bruce County, which of course is in southwestern Ontario, just a couple hours northwest of Toronto, you can reach out directly to myself or one of my teammates, and we'd be happy to assist you in providing some great resources and access to supports and help you navigate that journey. If you're located outside of Bruce County, not to worry, there's lots of great supports as well. You can reach out to your local small business enterprise center, also known as SBECS. Or if you're in the States, perhaps you can also do a search for business advisors, or through your level of government, reach out to them and see if there's any type of free services such as the things that we provide. So this is offered through our Business to Bruce program, one of our economic development programs. And with that, I'm going to hand the mic and screen over to Sandy. Like we said, please feel free to enter some questions in the chat box as Sandy goes through. And we look forward to helping you learn about QuickBooks using QuickBooks for payroll.
Great. Thank you, Tori. Hello, everyone. I'm Sandy Holst. I'm the owner of Host Continuum. I've been bookkeeping for close to 42 years, and I became a freelancer back in 2001. And I've had about 150 to 200 clients at any given time. When I had my business, the Host Equation, out of Hamilton, I sold it in about 13 years and just became a bookkeeping coach. And thanks to technology, I can live in Tobermory and hook into people's computers and just be a bookkeeping coach and give support. And that's what I do for the most part now. Tonight is all about desktop payroll. And we don't we don't train QuickBooks Desktop and QuickBooks Online together because they're two separate platforms. They're the same foundation about rules and everything when it comes to payroll, but the process is different because they're just two separate platforms. So what I'd like to do tonight is Tori's going to monitor questions. If you have any questions, it doesn't look like there's a lot of people online here. If you feel like you want to unmute and ask a question, just do so. Just interrupt and do so. I've got a full plate here with payroll. I'm going to cover quite a few of the rules when it comes to the government and employees and such. I'll do my best. I will 100% meet the deadline between 6:30 and 8:30. I'm pretty sure everybody worked today, including me, so I won't go past that. And so I'm going to share my screen and just get started and give you an idea what we're going to do tonight. So payroll's one thing. Payroll's one thing. Paying your employees is pretty much what you have to do every pay schedule, but there's all kinds of things behind the scenes that you have to make sure that's correct. And one of them is government rules and stat rules. So I will go through the QuickBooks process tonight and some of the background things that you have to know. But one of the main things that I know a lot of people are confused about is statutory holidays and the payroll rules. So we'll go through that. Government remittances and audits. Let's get into that because that's what, if we know the rules, we sleep at night. If we don't know the rules, we know they're going to be coming after us because they're going to be knocking on the door. One of the things I do want you to understand is QuickBooks does things behind the scenes, but I think it's important that you know what's going on behind the scenes and how the payroll liability numbers are created and the expenses are created. And there's one thing that I've learned to do years and years ago with all my clients who had payroll is this time around, this fall, this time of year, I do a source deduction integrity check, because the worst thing you could do is do your T4s and prepare your T4 summary, and there's a difference from what you owe to what you paid. So I like to be proactive and figure that out if there's a problem in advance of that January 15th last remittance. So we'll talk about that tonight. And I'm going to go through some tips and tricks and troubleshooting just to make sure that your payroll's right and your T4s are correct in the end. So we're going to do that. So a couple of things that I want to talk about. I'm going to go right into, I'm going to share my screen. I'm going to go right into payroll stat rules. So we all know QuickBooks, all kinds of accounting programs, and outside outsourcing, there's outsourcing payroll companies like Ceridian and ADP and a bazillion other ones. There's many ones that you can pick from depending on the fees that you want to pay, but all of them do the deductions. If you put the hours in, you set them up, and they'll do deductions, pay payroll liabilities for you, and you'll get a journal entry report showing you how to post it into your accounting program. So that's great. QuickBooks does that for you, and you would pay for that license fee, and you just determine what best suits your company on how you're going to do this. So payroll QuickBooks, you have to have a license to have that activated, and you want to make sure that your updates are good. But let's go back a little bit, and let's just make sure that we have the regular rules in place. So I'm going to go through statutory holidays first, and I'm going to talk about Ontario because we're in Ontario, but this changes if you have another corporation and you're out in BC. There's different rules for statutory holidays, but for Ontario we have these following stat holidays, which is New Year's Day, Family's Day, Good Friday, Victoria Day, Canada Day, Labor Day, Thanksgiving, and Christmas. And there's an August 5th civic holiday, but which is not necessarily a stat holiday where you have to pay extra. That's for the goodness out of your heart, whether you want to pay that as a stat holiday or not. But these are all stat holidays that if somebody worked it, they get paid extra for working it. We do have the Easter Monday, which is for government employees only. We have the civic holiday, which again is optional. And Remembrance Day is not a stat day, but however, some employers will allow the day off. And just recently, we got a new one for September 30th. And my apologies, I forgot to look it up exactly what it was. I know it's for I'm not going to fake it. I knew what it was a week ago, and I just can't remember it right now, but it's for government employees only. But we have to really be careful of our stat holidays and understand how that all works. So I'm just going to move down here a little bit. When it comes to a stat holiday pay, we have to decide and discern who is eligible. So for most businesses, there's two factors, and it's whether you are covered by the ESA, which is the Employment Standards Act, and whether you use the last and first rule, which applies to employees. So let's get into that for a little bit. Again, for most industries, we are covered by ESA, Employment Standards Act, and therefore we have to follow the rules. The last and first rule, I think, is very important for business owners to know, because we have to make sure that the employees have their own due diligence as well. So a stat holiday does not apply if an employee fails to work their last scheduled day before the holiday. So if they call in, if a stat holiday is Monday and they're scheduled Sunday, maybe it's a restaurant or something like that, and they call in sick, you don't have to pay them stat holiday. And if they fail to work after their first scheduled day after the public holiday, that is also part of that. So when I was bookkeeping for a restaurant years ago, we were really heavy into this last and first rule because, you know, there's sometimes a tendency of wanting some extra days off, and the next thing you know, somebody calls in sick. Somebody who fails to work their entire shift during the public holiday, that would also be an issue, whether you have to pay them stat holidays or not. There are some other important rules to keep in mind in addition to the last and first rule. So even if an employee fails to qualify for a public pay, they are still entitled to be paid at a premium for any hours worked during that holiday. So you have to keep that in mind. And most industries are part and parcel of this ESA Employment Standard Act. Any of the following types of employees can qualify. So all full-time, all part-time, all permanent, and all term contracts do come under this rule. The last scheduled day in the first and last rule does not have to be the day immediately preceding the holiday itself. So if I was scheduled, if the holiday's a Friday, say it's Good Friday, and I'm scheduled Thursday, but I'm sorry, I'm scheduled Tuesday, and I'm not scheduled the day before, that it still doesn't matter. If I work that shift, I qualify for that Friday. And that's important to understand. It's not about the day before or the day after, it's the last scheduled shift. And the other thing that you have to keep in mind here is if I never worked a Monday and the stat holiday is a Monday, I still get that stat holiday for the Monday. That was a little bit of an eye-opener about 20 years ago when I went, well, the person never ever works the Monday. Why do they get it? Well, guess what? They do get it. And so we have a reasonable cause as well for missing work, which has something to do beyond the employee's control. So if there was a death in the family, there was a car accident, then you would still pay them for that stat holiday because they meant to come to work, they intended to come to work, but something beyond their reasonable cause caused them to stay away. So then that's something as well. So you have to think about that, and you have to kind of realize that. How do you calculate holiday pay in Ontario? It's different in provinces. So if you do have a payroll in another province, you really have to know the rules. And you can Google these. The rules are right there with Revenue Canada. But in Ontario, we look at the previous 4 weeks that fall under that public holiday. And we take all the gross wages earned and we divide by the 4 weeks. And by 20, it's like by shifts, right? So, and we get a certain amount for that particular day. So somebody doesn't work that stat holiday, this is the formula. If they work the stat holiday, then they get time and a half, and you don't have to worry about this calculation. And so what we do here is there are 3 scenarios when it comes to stat holiday pay and vacation pay. Employees get vacation paid out on every check. So vacation pay is part of the stat holiday calculation. So employees will, sometimes you will pay them out their vacation pay paid on every check. An employee banks a vacation pay and gets paid out when taking a vacation. So when they get paid out, that's when that's going to be included in a stat holiday calculation. And when an employee banks vacation pay and gets paid out in a lump sum during a specific day. So I have been around where some people will say, I'm not going to take a vacation pay, but I want to take some vacation dollars because I need to spend it on something, but I'm not going to take a vacation. So whenever that is released, whether it's per pay, per vacation, taking a vacation week off, or taking a lump sum, that's that pay period where that calculation for stat holiday is going to come into play. So what if the employee is on vacation during a public holiday? Well, they kind of got to get paid. They just get paid using that calculation. So I'm just going to explain here, and I'm going to leave this here so you can kind of let it sink in a bit. But when we take the 4 weeks work weeks prior to this work week, the calculation of the total of wages earned. What we'll do is week one, if it doesn't matter what, if you are Monday to Sunday work week, if you're Saturday to Friday, it doesn't matter, but it's what's the work week, what's their pay rate, what's their gross pay. That includes a vacation pay if you are paying vacation on a per paycheck. And you do this for 4 weeks. And so what happens here is in a 4-week period, on this example, they've earned $1,500. So the total public holiday pay is $1,500 divided by 20, because it's sort of based on 5 days per week. And it is $75. This is what they will get paid if they did not work that stat holiday. And if the employee is paid 4% vacation pay each pay, this would be included in the gross pay. And that's pretty easy across the board, because if you have payroll in QuickBooks or Ceridian or ADP, the numbers are there. It doesn't take much to do that calculation. And that's your stat holidays. And it's important because if you don't do that right, employees normally know the rules, and they're going to take you to task if they didn't get paid the amount of money that they wanted to get paid. So I want to move on. I'm going to get into QuickBooks. I'm going to get into behind the scenes in the whole bit, but I think it's important that we're well-rounded in our payroll knowledge, that when we get into QuickBooks, is it working? Do you understand your ramifications? Do you understand the rules and ramifications when it comes to government audits? So when it comes to these audits and payroll, we have 3 of them that we have to deal with. We have source deductions, which is usually on a monthly basis, the payments. You can be on a different schedule, which could be quarterly. But if you have a huge, massive payroll itself, you could be on an accelerated remittance, where it's the 10th and the 25th of the month that you have to pay. And if it's even bigger than that, you have to pay your payroll deductions on a weekly basis. Really tough on the cash flow. That's usually when you have a payroll that's within $1 million. So a staffing company, like an outsourcing company for payroll, they would be on that accelerated for weekly payroll if they're over $1 million. If you're around the $500,000 mark, not too sure what the threshold is, but then the CRA might move you to the 10th and the 25th. So you're paying your payroll deduction twice a month. WSIB and EHT is based on annual payment. It's based on a monthly payment or quarterly payment. Just depends on what your gross payroll is. But these are the 3 guys that we have to consider. So source deductions is if we talk monthly, it's due on the 15th. If you're past the 15th, including if you go online to your bank and you decide to pay your source deductions on the 15th, when you do it on the 15th, it gets moved over to the 16th and you're going to pay late penalties and interest. So what you want to do here is, if you pay your source deductions online, you want to pay it in advance. Now, there's nothing wrong with going online and setting up the payment for the 15th. That's fine. You just can't do it on the 15th. And so otherwise you're into late payments, penalties and interest. When you don't pay your source in full, you're kind of going down the dark path. And so next thing you know, you're going to get into arrear payments, because you have to make installments. And as soon as you file in full, but you don't pay in full, the radar is going up with Revenue Canada. And this is where an audit is going to occur. It's not going to occur right away. I usually find that it occurs after the year that you've sort of shorted the payments. For whatever reason, cash flow is cash flow, but then an audit is probably pending. and it's not a tough audit. Usually I find with Revenue Canada, source deduction audits are half a day, just a little bit, half a day to 3/4 of a day. And it's really easy to calculate because it's QuickBooks. What does it say? What did you pay? And what did T4s add up to? So it doesn't take much to come to the end result of what you owe. And Revenue Canada auditors are going to add the penalties and interest, and then they're going to say, how would you like to pay this? And then usually you say, I can't pay it. And then there's a process of going through arrears, but they will expect you, if they allow you to do arrears installments, they expect you to stay current with your source deductions. Otherwise, your penalty and interest rate goes from 2%. And if you're a real bad business owner where you keep ignoring them, it goes to 20%. So you just have to be very careful there. It's best in a way is to make sure that you're paying your source deductions in full, and you probably will never see them come for an audit. And the audit process is very quickly. It's so simple. WSIB on the other side is it's rate based per industry. So you will apply for WSIB, and in your application you're going to say what industry you're on, and you're going to pick the closest one, and then they'll give you a rate. And the payments are usually monthly or quarterly. I've seen the manual as well, but whether they're monthly or quarterly, they're due the 31st of that month that they're due. Employers are exempt from calculations, so you don't have to include, if you are the business owner, you don't have to include your wages in this. You can subtract them off. And it's very simple. It's the gross pay times the rate divided by 100. Very simple to calculate. And if you're over a certain gross payroll amount in a year, you can expect an annual report that needs to be filled out. Not everybody gets this. It depends on your threshold for your gross payroll. And if you do get an annual report, it's not that hard to calculate. You just follow the report, the calculations, and it'll determine whether you owe money or not. The audit process with WSIB is very simple. It is based on T4s, but what they are after. When a WSIB occurs, they're after, are you paying contractors? Because contractors should be under the calculation. And unless the contractors show up and say, I have my own WSIB, which they should, if you don't want to put them in the calculation, then an audit is simply about who are you paying as a subcontractor. And they believe, Revenue Canada states in their rules, that all subcontractors that are not employees are part of your WSIB calculation, unless they can provide their own account, which they pay into. Then they're not part of this. So this is another fast audit. These guys can come in. I sometimes don't see them past 3 or 4 hours. They come in, they know what they're looking for. It's about the contracting expenses, and then they're out the door within that 3 or 4 hours. Of course, it depends if you're a very, very large corporation. That could be very much longer than that. The EHT is the other one. So if you're over a certain amount of money, in 2019, it was 490,000 in COVID relief. So if your gross payroll is less than 490,000, you don't have to worry about EHT. That's the threshold. With COVID relief in 2020, it went to $1 million. So if the gross payroll under $1 million, you don't have to care about EHT. In 2021, it was the same thing. Actually, it went to 1.2 because of COVID relief. I suspect in 2022, it's going to drop back down to that 490. And that threshold has been changing over the years. It was 400,000, then it was 450,000, then I saw 460, and so now it's 490. And it's very simple. All you do here is anything over 400,000 is exempt. So if I had $1 million in gross payroll and I had to pay EHT, I'm taking 400,000 off of that calculation, and then I'll pay 1.95% right here on the rest of it. And it's interesting to note that employers, if they're on payroll, it doesn't work like WSIB. It's the same. You are included in the calculation for EHT, your salary as a business owner. So something to keep in mind. When it comes to EHT, they really don't care about you making payments or installments until you go over that 490 or that million or 1.2 million threshold. So you still don't have to worry about it until you see your gross payroll passing that threshold, and then you need to start making monthly payments. So sometimes it might take to September to get past that threshold. So don't worry about it. You don't necessarily have to worry about it until then, until you do that. But you have to look at your profit and loss, and are you hitting that threshold or getting close to it? The audit process with EHT, I have to be honest with you, the audit process when it comes to payroll, quick and easy. It's based on gross payroll, based on your T4s. It's based on black and white math. And once you do your T4s, it's very easy to go through. They see what you should have paid. They see what you paid. What's the difference? Payment, refund, doesn't matter. That's it. So that's another fast audit process right there. So that's that one. Okay. One of the things before I get QuickBooks turned on here is I want you to see the payroll entry and how it works behind QuickBooks. QuickBooks does a lot of math for you. But if you do a manual payroll because you only have 2 staff, if you want to question if your liabilities are correct and not just take it for granted that QuickBooks has done it right, sometimes you have to think, you have to look at things and is it correct? And so the gross, how it works here is if I have a gross payroll of $1,950, that's going to be expensed onto the income statement. The deductions will go to the payroll liabilities. So as an employee, I'm going to have $250 deducted, goes to the balance sheet, payroll liabilities. My CPP goes to the balance sheet under payroll liabilities, and my EI goes to the balance sheet under payroll liabilities, and the check coming out of my bank account is the difference. But we have to think, we have obligations to Revenue Canada as an employer. So what happens here is we have to pay more than what is deducted off of the employee. So as your obligation as a company is you will pay the same amount, 100% of the deduction of CPP to payroll liabilities, and it's expense to you because you're obligated to pay more than what's deducted. So we have to have an entry. What happens behind the scenes is we have another entry that goes to payroll liabilities to add to that balance owing at the end of the month. And so this $60 that was taken off of the employee, we have to match that. And so it is a deduction over to payroll liabilities. But with EI, $33 was taken off the employee, but we're obligated to pay 1.4% of that, so more than 100. And so our obligation is $46.20 off of that employee, and it goes to the payroll liability. But in order to reconcile these 2 extra entries, we expense this. So we expense the extra CPP and we expense the extra EI. So that's why we will have EI company expense and CPP company expense, because that's an expense to the company. But behind the scenes, we are crediting payroll liabilities, crediting them for income tax, CPP, and EI, then our portions of that. And then the offset is we are going to expense the CPP on the income statement and we're going to expense the EI in the income statement. And you might say, well, why do I need to know this? It's about troubleshooting to make sure things are accurate. You don't have to really get into this very often, but if you only have a couple of people as on payroll, then you have to know the right entries if you choose to do it manually. And many times I've seen people doing the payroll manually, and they're just expensing the 1607 net pay, but they're not accommodating for all the payroll liabilities that are owing to the government. And then, you know, you got to make sure that your check is right, because if you don't, your T4s are off when you get there, when you get to the end of the year. So I'm going to move over to QuickBooks now. And let's just take a look at the Employee Center. So what happens here is, first of all, you want to determine what schedule you're on. We have, you know, Canada's allowed to put, you're allowed to go on any type of schedule that you choose. And the most common ones I see, and I really don't see any other ones, is do you pay bi-weekly? Do you pay bi-weekly, which is 26 pay periods in a year. Weekly is 52 pay schedules in a year. Bi-weekly is 26, and semi-monthly, which is the 15th and the 30th, is 24 pay periods in a year. There is a monthly pay period, pay period, so 12 pay periods, but it's very rare in Canada. In Europe, it's popular. In Europe, you'll rarely see weekly, bi-weekly, or semi-monthly. It's monthly, and they just pay it out once a month and say, go handle your own budget at home, but we're only going to pay 12 times a year, not 24, not 26, or not 52. So it's really interesting. These are the ones that we offer, and you have a choice between, you know, 7 days a week. Is it Monday to Sunday? Is it Saturday to Friday? Is it Friday to Thursday? That's your choice as a business owner, but you want to set that up. And when I do this with QuickBooks, I'm just going to go to the chart of accounts for a second. When I do this with QuickBooks, I separate it. So QuickBooks will have a template, and it will be payroll expenses, and it bunches the gross, bunches the vacation, bunches the CPP, bunches the EI, and I'm not a fan of that. So what I do is I separate it, and I have payroll wages, CPP, EI, staff bonus, WSIB. If I'm got a Ceridian or an ADP, I might have those fees separate as well. So I'm not a buncher. I think that's dangerous. And if you have a year end, your T4 summary at year end, these totals on the income statement should be the same as the T4 summary. And I've caught accountants asking me why it's different. So, you know, I do those separate things. And it just helps for troubleshooting if something is going wrong rather than bunching. And I want to know what my vacation pay liability is if it's being accrued and you're not paying it out on a weekly basis. So that's one of the things that I do is I adjust this. And one thing I should mention here for anybody that's a freelancer or has a file and you go, why is payroll here a cost of goods sold? Well, it depends on the industry. So this file is actually set up. I have all kinds of right things on this. This is a training file for me. So I have all kinds of right things on this file, and I have all kinds of wrong things on this file. So just bear with me if you see something and you don't understand why something is. It's just because it's a training file. But there's many industries where I would put payroll as a cost of goods sold if that's my biggest cost to make revenue. I have done that, and accountants, I work with a lot of accountants, and we have done that. Admin might be overhead expenses, payroll, but a lot of times I've had cost of goods sold as payroll as a cost of goods sold, because I want to see what does it cost me to make revenue. And in some industries, payroll is a big cost of goods sold, so you must have just put it up there. And in that way, you can have a better analysis at the end when it comes to your income statement. So on this file, it is a cost of goods sold, but you can see how it's separated. And you can go to your payroll items and re-tag everything to these accounts. And just to bring that payroll item up. And right here, if I go to lists and I see payroll item list, this is where you can actually manage everything. And you can manage here are all of your items here. Tag number one, tag to the right T4 summary box. That's important. You want to make sure, for example, T4/A, T14/A is gross wages. So you want all your gross wages showing up on this in this box. You want CPP showing up in the right box, EI in the right box. You want to make sure that your T4s are set up properly. If I come into here and I got my company CPP, I can click on this and there's the name. It's the offset will be the employee. But now what I'm doing here is so all my deductions are going to go to payroll liabilities. And then when I come over to my expense account, I can pick the right expense account. And so when I re-tag and separate from the generic payroll expenses, I've created new accounts, whether they're overhead or cost of goods, it doesn't matter. And then I can re-tag them to the right ones. And in this way, I have more analysis at the end of the day when I want to see what my costs are when it comes to payroll. And so you can come here to your payroll items and you can actually custom design what you have. And if you have additional deductions or additional additions, payroll items is where you're going to be, and this is where you're going to set things up. And so you just have to know where things need to be placed. But the most important things are you putting everything to the right account. And when it comes to accruing vacation pay, so it's not per pay, you're accruing it to relieve it when somebody takes a week off or they want vacation pay. This is the only item as it builds in payroll. So they 4%, 6%, or 8%, depending on how long they've been with you and how much percentage they get for vacation. It will build up in a corner of a payroll stub. And then when you want to relieve that, this is the only item that's going to relieve it. So it's very important if you see more vacation pay paid out, so vacation pay items, they're not linked to that one spot. And so it will never be relieved. And so you want to be very careful there. When it is the vacation pay. And I think we just had somebody join us. Do you mind just muting yourself? I think it's Mortala. If you could just mute yourself. Or Zoom. Okay. Yeah, thank you. Thank you. And so what happens here is this is where you just want to make sure that everything's tagged. So if there's a staff bonus, just follow through the prompts. And now there's an account called staff bonus. If you have a lot of staff bonuses, you might want to have a separate account. So you would go to your chart of accounts and create that payroll account. And it's just applied to the earnings, nothing special. And you just do what you have to do. But it's important that you do see that everything's going into the right spot. And I'll show you I'll show you in a source deduction integrity check in before we leave tonight on how you can cross check that. So when it comes to running your payroll, when it comes to payroll itself, so I just had a chat with someone today about this. When it comes to payroll, and I'm just going to hide my screen there. The first thing you do with payroll is you must have all the payroll information. You must have the personal information. Make sure the spelling is right. Make sure their birth date is right. Make sure their address is right. And your payroll information. And it's really important that we have social insurance numbers. You can't run a T4 without a proper social insurance number. And you just fill in the blanks here. Okay, and it's just these 5 little spots, and you want to fill in the blanks. When it comes to the payroll information, you want to make sure that you're on the right tax table. Well, Revenue Canada gives that to you. And when you update your payroll every January and July, then these are going to be automatically put in. But here is if you have additions or you have deductions, this is where you're going to add to it. So if I have additions, there's my hourly rate. If this person gets commission, if this person gets a bonus, I would be adding bonus here. And then you don't have to put a default amount in. You can just change that on the paycheck. But if I have deductions like extra tax, there's an auto allowance where it's going to be deducted. Usually auto allowance is over here in the earnings, but this is where you can set it up if it's a default per employee. So I recommend that you come through here. I don't really care in a way if it has to be Mr. and Mrs. Ms. or whatever, but you want the SIN number to come in here. Is it a male? Is this person a male or female? Fill in the blanks. Address, any additional info. If you're a small company, you don't need an employee number. If you're a very large company, that's probably what you would do. Payroll information, you would do direct deposit if you're paying for that. That's fine. That's cool. Vacation pay, you can turn around and say, okay, well, they're starting off at 0. They just got hired. Are we going to retain the vacation pay? Or are we going to pay every period? And is it 4%, 6%, or 8%, which determines the amount of time that they've been working for you, or if you want to give them 6% because they're doing a great job and they're a great asset to your company. Nothing like that is cast in stone. That's up to you. Accrued hours, same thing. Most people don't really track the hours. It's really the accrued vacation pay, but you want to come in here and fill this out. So your start point with payroll, get the information that QuickBooks is looking for. If you're missing a birth date, if you're missing a SIN number, you're missing a postal code, you can't run your T4s. So it's very important to get that information in the beginning. Then what happens here is there's your people here. If somebody's inactivated or terminated, you can make them inactive. Okay, you can make them inactive right here. So I recommend with QuickBooks, because you really can't screw things up too much. Everything can be fixed. 99.9% of things can be fixed. But I recommend to click on things and learn about your program. So the other thing here is when you decide to run a payroll, here's your payroll center. So just to be clear, you can go to company homepage and you can pick up, depending on how you see things. Are you a visual person? Are you a person that likes to picks things up better when you read? Or more visual because you like your icons? But you can pick everything up here as well. Pay your payroll liabilities, pay your payroll, your employees, process your payroll. You can also pick all of that up right here. So when I want to pay an employee, I'm going to go to unscheduled. I'm going to go to unscheduled, and whether I want to pay one person because it's a one-off check that I want to give them a bonus or something like that, or I can click on all of them. And when I do that, I open the check detail. And the most important thing here is these 3 guys right here. If you have multiple banks, are you taking the money out of the right bank account? That's important. So you have to pick the right bank account. Here is the pay period ends. This is the day that it ends. So if you're Monday to Sunday, it's a Sunday date. If it is a check date, then you have your check date. So most people, if they're Monday to Sunday, they pay Friday. So there's a process day of 4 days, because you might have some employees that are working in, they travel and work and they have to get their hours in. So it's normal to say Monday to Sunday on a bi-weekly pay period, and payday will be Friday. So there's a 4-day process time. I rarely see that it's Monday to Sunday, pay Monday. That's just not enough time. And if you're Ceridian and ADP, they need that process time. So that's the norm, is 4 days later that you pay. And it helps with cash flow as well. But if you click on everybody and you open the payroll, their defaults are already set. So you just have to put in the numbers, the hours, and it does the math for you. And you would go to next and next and next and next, and then, hopefully I get to the end, save and close. And down here, you would continue, and you're really just following the prompts to produce your stuff, your payroll. And then over here in File, Print Forms, Pay Stubs, and really don't know what date I'm going to be able to pick here. Let's see if I can go back a little bit and see if I can pick up some. Yeah, let me go back to 2011. There we go. So your pay stubs are going to come up here, and then next thing you know, you can preview if you want them. You can select all or select none, then one, and then you can email the pay stubs to everybody. And there's one thing that you have to be careful of. Let me just finish this. You know, everybody should have an email address if you're going to email the payroll. Let me just do one. That was a mistake. Select none. Select none. Anyways, let's give me a bit of grief. What happens here? A memo will come up, and it's usually the password of an employee. It's going to come up in a second. So the employee, nowadays, the employee will have instructions on how to open it up. And it's usually so many letters of their last name and so many numbers of their birth date. So it's really cool that you can send them their pay stubs and none of this printing and all that sort of stuff. So that's kind of cool. And one of the things that you have to be careful with QuickBooks is your license information. So the license information is important here because you want to come in here and your tax table has to be up to date. So Revenue Canada states in January, you want to update your payroll. So update QuickBooks Desktop, and you want to update this here, and it'll download your next payroll table for January. And you want to do that prior to your first payroll in January and prior to your first payroll in July. And when you've updated, so help, update QuickBooks Desktop, you want to come back into my license information, and you're expecting to see the ending of this tax table being either, when you do it in January, it becomes June 30th, 2021. When you update the tax table in July, it becomes December 31st, 2021. So you want to put in your day timer. You want to have the right tax tables, because what happens if you don't, you're not deducting the correct CPP, EI, and income tax. And then you're going to get a report after your T4s have been submitted. You're going to get what's called a peer report from CRA, usually will arrive in March. And they're going to say you didn't deduct the right amount of CPP and EI, and you owe this much per employee. So it's very important that you do update your payroll schedules, tax tables in January and July. Definitely a very important thing there. When you print your checks, you can print checks by putting in the correct check number. You can e-transfer and just say debit. How you direct deposit through Ceridian, ADP, or even if it's QuickBooks here, you pick check numbers, you do e-transfers or direct deposit, say whatever you want to say, and it just automatically goes over to the bank account that it's coming out of. To pay your payroll liabilities, you can't come, so this is something I've seen. If somebody wants to pay their payroll liabilities, they may go to reports, employees, PD7A summary. They will pick the dates, and I probably don't have one, so I'm gonna have to go 01, 12, 2011 to 31/12/11, and then there's amount. So you will have, it's really cool. This PD7A is amazing because it tells you exactly the CPP that that was deducted from the employer and the CPP that the employer owes. So there's employee, company, and then there's EI and company. So it's really cool. And then there tells you what you need to remit right there. Problem: if you go to write checks and post it from here, you're not relieving the payroll liability. You have to, when you do this, you have to go through the payroll system. So go to payroll liabilities, pay payroll liabilities. And then I don't know if I'm going to get an amount here, but it will be listed here. The CPP, the two CPPs, the EIs, you can have your date, you can pick your payment date, you can, and then what I usually do is, let me go back to, I don't know if I'm going to be able to pick one up. Yeah, I'm not going to get a balance. So anyways, what happens is all of this amount here is you pick review and it will go to write checks. It will come up and be picked up here in write checks. And then what I normally do is see source deductions remittance, September 2021. And then you'll see about 6 lines down here. And what I do is I copy paste to each memo down here. Reason I do this, if I got to troubleshoot, I'm so speeding up my troubleshooting because this is going to be, when I go to the payroll liability account on the balance sheet, it's going to just jump out at me and then I can figure out what's missing, what's wrong. So it's quite the thing if you don't. And the reason you don't go to write checks, you want to go to pay payroll liabilities right there, pay payroll liabilities, is because if I go to employees, payroll liability balances, I don't want to see things like this outstanding. When I pay a source deductions in full, this report says, yes, you have no errors, you have no errors, you have no errors, you have no errors. But see how all of a sudden something happens. So maybe you paid your payroll liability, somebody said my check is wrong, and you adjusted it. And so this is why this happens. And so when I go to payroll liabilities, I have to pick up this adjustment in my next remittance. And so you want to watch this payroll liability balance to make sure that you have paid what you expected to pay and what the PD7A paid. So that is employees, payroll. Keep an eye on your payroll liability balances right there. And all you do is, if I had to pick this guy up, all I do is go to employees on my next remittance and pay payroll liabilities, and I will go back to January, and that will pick up that March guy, and then that's how I make that payment. And see how I've gone back at one point and I've accounted for these, and now the balance is 0 here. So with your payroll, it's important you have to do your cross checks because you're affecting employees, the employees, and you're affecting the T4 down the road in the future. And when you do your T4, you want to make sure that what you owe is what you paid. And so I can come here, I can actually come here and go 0101 11 and 31/12/11, and that should be my T4 right there in that. That's my T4. And when I do my T4 summary online and I reconcile my T4s, it should be the same as this PD7A, which is the same. QuickBooks is the same as what you calculated. I can also come to employees payroll and there's my T4 summary, and it will be exactly the same. If notice how I can't change the dates on this one. So sometimes I use the PD7A if I'm doing a little troubleshooting, but it would be the same on this T4 summary. And when I want to do my T4s, this is kind of cool. When I want to do my T4s, and I will go to employees, payroll forms, process T4s. And sure, I don't have an updated file here, so it's going to give me some a little bit of crying. But if I go back to 2011 and I check them all, okay, so I don't have, see how you don't have SIN numbers for some people? So it's not going to let you do the T4s. But if I review this one, I can go into review. I can see this sort of thing. Here it comes. And I can see that, and I can print these off. And I can do this at any time. And so I'm looking to see if all the boxes, everything's ending up where it's supposed to be. So my income tax deducted, my CPP, my EI, my insurable earnings. Notice how that's insurable earnings is the same as that. It's not always the same, depends. Your gross earnings and insurable earnings can be different. There's my CPP earnings right there. And so sometimes what I do is I will pull these off in the fall. You can print these T4s anytime if you want to check and see if your PD7As and your T4s are talking together. That's another thing. And so what happens here, and I'm just going to pull this up. Give me a second. And I'll get rid of that one. Okay, so when I have QuickBooks, let's get rid of our names here. Let it shrink. All right, so our PD7As, I do an integrity check for a reason, because I just want to make sure I don't have heartache at the end of the year. So I would go through each month. And I would pull each one of these off from January to February to March, right straight to October, November, whenever I'm doing this. And the PD7A states this is what I should have paid. So then I will go over and create an Excel spreadsheet, and I will put these down. I'll put, here's a source deduction integrity check, and I will transfer all the information on a PD7A exactly, and it'll state what my payment should have been. And then I go into QuickBooks and find my payroll liability checks, and I will put in what did I pay and do I have a difference. Many times there can be a difference. You can do this integrity check on you don't really need to do it on a monthly basis. You want to be able to just track and find errors in advance of that last remittance on January 15th. Because if you have an error, you can pick it up, and I'll say this publicly, that if you pick it up before January 15th, Revenue Canada won't be the wiser. And so you can find your errors as long as on your T4 summary you have a 0 on the T4 summary at the end of the year. Revenue Canada really isn't going to care all that much unless they do an audit and they go, oh, okay, well, you kind of made a mistake and you owe a penalty and interest on that. But you just, I just wait for that audit to happen. But you do want to make sure that your bookkeeping is accurate, and we all make mistakes. All of us, 42 years, and I still make them. And so I'm just doing cross checks to make sure that I can pick up any errors that I have. So what happens here is I do this. So this is just simply the PD7As from QuickBooks stating what was paid. Here's my CPP, my EI, my income tax. I'm breaking it out from that PD7A. I should have paid this. What did I actually pay? And do I have any differences? And if I do, that's going to be added to the next remittance to clear that out. So it might be an underpayment, and then the next remittance would be an overpayment, but the bottom line is at zero. The next thing I do this time of year is I want to know that my T4s are talking with the PD7As. Doesn't always happen. 90% of the time it happens, but it doesn't always happen. And so if you have mileage, if you add additions, you have to make sure that, you know, you added the T4 box. If you didn't, T4s and PD7As are not going to match. And so what I do this time of year is I want to see where I stand. So I can, you know, if October's payroll is finished, I can print off the T4s and I can print off the T4s and do this math. And what I'm looking for is here's what my PD7As say between everything. So there's my total CPP and there's my total EIs and my income tax. And then I come over and I run the T4s and do my T4s gross payroll CPP EI add up to the PD7As. And so for example, these are T4s with just the CPP and the EI and the income tax deducted. Has nothing to do with the company expense. So that's what that is. That's what these columns are for. And then what I do is say, okay, well, the company expense is here and the company expense is here. And so this amount, does that equal to that amount? And does this amount equal to that amount? And you will always, with EI, have a slight difference because of rounding off. Who cares? Revenue Canada states on the T4 summary, there's no penalty, interest, and no payment if it's under $2. So 8 cents, it is what it is. You would live and breathe by the T4s. Okay, so I do this. I found it important with my company. It was my liability if the T4s were off, and it was my liability if the last remittance of the year was paid, and then we did T4s after January 15th, and there's a difference, bingo, I could be responsibility, or my company could be responsible for that penalty interest because we were in charge of the payroll, we were in charge of the T4s, and there's a boo-boo there. So my rule still is my rule. T4s are prepared before January 15th. You don't have to give them out to the employees. You can still wait to the end of January or into February if you wish, but they're prepared, and the T4 summary and the PD7As are reconciled before the last remittance due from December. So at the 15th, or if you're on an accelerated schedule, the 10th and the 25th. If you're on an accelerated schedule where you have to pay source deductions weekly, then that would determine when you want to do T4s. And it's so easy to do T4s half the time. Number one, you could do payroll in advance if everybody's salaries. You can do that anytime. You can do that anytime towards Christmas and just do those checks and do the T4s. Or as soon as you do the last check in December, the last check that deals with the end of the year, well, you're ready to do T4s anytime. So you can double check and cross check yourself. And if there is a little bit of a difference, then add it to the last remittance, right? Add it to the last remittance. So your T4 summary is zero and reconciled when it goes off to Revenue Canada. Couple of troubleshooting tips and tricks and stuff like that in QuickBooks. Tori, is there any questions so far?
No, so far none. Everyone's pretty quiet this evening, so well, I guess
you know what. Sometimes I find, like, I mean, there's a lot here with the payroll. You know, you're going to post it, and then everybody's gonna, like, a lot of times I find everybody goes in and then they pick at what's really relevant to them as well, because there's so much here. But so what happens here is just some tips and tricks.
We actually just had one question just come in now. I joined after you started. Is QuickBooks multilingual? How much does it cost to get a version of QuickBooks for a business under 10 employees?
Oh, say that again, the last part.
How much does it cost to get a version of QuickBooks for a business with under 10 employees?
Oh, you know what? Just go to Intuit. Just go to Intuit. They have various prices. They have various prices. You just have to go to Intuit, Google them, and just seek out or give them a call. And I don't recommend doing it manual if it's more than 2 or 3. So that's why I showed the manual, how it works behind the scenes, because I've been known to say, don't waste, it's expensive for 1 or 2 employees. So I have this system of knowing what the debits and credits are behind the scenes. But it's high risk for error if you're 3, 4, and 5 employees. You must just pay the price. I would recommend paying the price for that, because it just takes, you might think you're saving money, but you're just paying somebody to do T4s, and you're high risk for error towards the end. Yeah, but QuickBooks is always forever changing their prices, so I can't really quote the cost on that. I don't really have an affiliation with their sales team, so I would just say give QuickBooks a call, check out their payroll costs, and they also have payroll costs for QuickBooks Desktop, and they have payroll costs for QuickBooks Online. So whether they break it down, I think they do break it down to employees under so many and over so much. So I don't think, it's probably one or the other, but I don't think they have too many multiples, but yeah, just give them a call. Okay, so payroll clearing. I want you to, what happens here is, what happens here is where you have individual checks. Everybody is individual, and they will go to the bank account, and the checks will show up. I'm just going to grab a bank reconciliation here, and all the paychecks all show up here individually. But what happens is maybe you have the bank. The bank is doing the direct deposit. Royal Bank does that, TD Canada Trust, they all do that. And so next thing you know, it's not each individual one of these coming out of the bank statement, because I'm a firm believer of mirroring the bank statement. Just the total of all of these will come out, right? And so what I find with that is, well, now just to make sure what came out of my bank, do all of these add up to what that total that came out of my bank? So what I do here is I have a payroll clearing account. So instead of all these checks coming into this main account, I send it to payroll clearing. And so what happens here is they're not sitting here. They're a credit. They're a debit in payroll clearing. But when that total comes out, I just post from write checks here. The total here might be Royal Bank, or I'll do TD Canada Trust because I know it's on here. And maybe the total came out like this. And what I do here is payroll ending October, if I could spell, 24, 2021, and I copy paste that memo down to here. By the way, guys, this is not payroll, but here's a proactive thing here. Always use both, because one goes off to the balance sheet, one goes off to the income statement, and you really want to kind of see details. But what I'll do here is I'll go to payroll clearing. What happens here is all those checks will be a debit here, and this total amount comes and offsets and takes it to 0. So if anybody has that situation, use the payroll clearing method, and then that way you can see if Royal Bank, TD Canada Trust made a mistake, or you could see that when you posted all these checks, did an amount get transposed? So maybe there was an error there, and it's a very easy way to know if your payroll is accurate. T4s, so I'm just going to go through some troubleshooting things here. T4s are calculated by the paid date. So if a payroll is ending December 31st and you pay them 5 days later, which is January 4th, that payroll is the next year. So December 31st is, say, 2021, but I'm going to pay, that check is dated January 4th, 2022. That paycheck is on 2022's T4. So something to think about that. And no, you don't go and play with the numbers just because that payroll, incorporated December. It is what it is. That's what accountants do at the end of the year. They'll accrue that payroll. So you just stick to that system of whatever the ending pay date is and whatever the check date is, and let behind the scenes work it out. So that's important to understand. I've already talked about reconciling before your T4s before January 15th. You can't believe how much heartache that could save you if something is wrong. Okay, here's another thing. So if you are with a company or have a client that cannot pay in full, they just can't. Like, you know what? Life happens, crap happens in life, and cash flow is cash flow. And many times business owners are just trying to stay above water. And when it comes to payroll and HST, when it comes to HST collected on the invoices, sometimes it gets spent before it's due and is owed, right? So what happens here with those things there is I will take my payroll liability, and it's not going to be paid at all. You will take this, whatever's owed, and you flip it to payroll clearing, or you actually leave it here. And what I do, and I'm so sorry I don't have an example here, but what you do is the payroll liability will show up here, and then I offset it on the last line, and I send it to payroll liabilities, arrears. I'll send it to arrears, and I zero it out. And then so if it was 1234 owing, and it all added up to 1234, I'd go in negative 1234 and say transfer to payroll arrears. Maybe it's September's and remittance. And then to make this close properly, I send that to 0. And so it's important. The reason I do that is because I want to keep my payroll liability reconciled. And so I just move it. I just move it from the actual liability, payroll liabilities. I move it from the payroll liabilities, and I just send it over to arrears, and at least I know how much is owing in the end. And then I just kind of keep moving it until, and then when the business owner says make an installment, this is where I'd come this is where I would come to write checks. What's the date I'm going to make the installment? I'm going to send it to whatever today's date is. I'm going to send it to, I'll call it Receiver General. And maybe they're going to make a $10,000 payment. And I'll just say source deductions arrears. October 13th, 2021. And then I send it to payroll arrears. And so what happens here is the debt is just being moved from payroll liabilities to arrears. And every time an installment is paid, it's relieving that old debt, that stalled debt. And so again, I would do this, copy paste it over to there, and save and close. All right, and then every time somebody doesn't pay it, I send it over there, and as I make installments, I can see how the debt is being cleared. All right. Okay, guys, just a couple of rules and Revenue Canada stuff. I'm going to watch my time here. What happens employee versus a contractor? So I've seen it many, many times. I'm just going to put me up here for a second. I've seen it many times where some business owners really, they don't want the trouble of employees, right? Sometimes I can agree, the drama and all that sort of stuff, but there's CRA rules we have to abide by, right? So an employee is somebody that is employed by a company, and you are the broker for the deductions, and you pay Revenue Canada on behalf of them. So you deduct and you send them the money on a particular remittance schedule. But a contractor, it is deemed that a contractor, if they're not deducted, there's no deductions, a contractor has to invoice you, and they have to have more than 2 or 3 other clients. If they are 40 hours with a business and they are only with that business and have no other clients, Revenue Canada deems them as an employee that should have deductions, and you're going to get nailed down the road. This is where WSIB comes in, because they will tattletale when they see contractors, and that's a lead when they see contractors to tell Revenue Canada, you might want to check on these contractors or this company to make sure that these contractors have more than one client. And so it's been a little bit of a trick over the years on not wanting to pay deductions and having the headache of source deductions, but it doesn't really work. So a contractor has to have more than 1 or 2 clients, and they have to prove that. 40 hours doesn't work. That's deemed as an employee, and you should be doing deductions. Also, contract. So this is in some industries, not all, but if you're paying a contractor, then you should be filling out what is called a T5018. So this is another little thing that happens that a business owner can get caught on. It's not all industries, but definitely construction and any industry that's heavy in contractors. So a T4 is January to December, and then you have to submit them by February 28th. And if you don't, depending on your gross payroll, will determine how much of that late penalty and fee and interest that's going to be. So if you are a T4, you must have them submitted by midnight on February 28th or 29th if it's a leap year. Half decently large gross payroll, it can go up to a $2,500 fine instant. They're not gonna, you'll have that penalty at you fairly quickly. So you want to be careful. T4s need to go out. It's appreciated by employees that the T4s are usually out by the end of January, so they can do their own taxes and all that sort of stuff. And it's not appreciated when they get it on February 28th and 29th, just because you wanted to hang on to them. Just get them off your plate, quite honestly. Make sure they're accurate. Once January 15th comes and you've reconciled your T4 summary, get them off your plate. Just move on to other things and get that project, that job off your plate. A T5018 is different. It is due within 6 months after a fiscal year end. So if you're sole proprietor in a partnership, you're already at December year end. That's your year end, your calendar year. That's deemed years ago with Revenue Canada. So, you've got till June 30th to get those T5018s out. And God forbid if anybody's an accountant online, and I'm not, just speak up, but that's what I know. And so if your year end is April, then you have till October. I think that's 6 months after. You have till October to get the T5018s out the door. And many contractors don't appreciate you filling these out because sometimes they prefer to be under the table, but you should be doing these, and Revenue Canada may come after you on that.
Andy?
Yeah.
We've got a question. It is there any T-slip or form that a company should prepare so that CRA knows the amount paid to the contractor, not or paid to a contractor through the year? Let's see, them above is the contractor, in particular is service provider, not a construction trade. Service providers. We're looking at consultants likely, I think Erin is looking at here.
Yeah, you know what, that's interesting. I would Google who qualifies for a T5018. I know there's many construction industries, the whole bit, a service provider. Also, if somebody's a contractor that's incorporated, you don't fill that out for incorporated contractors because they're filing a different way. So a T5018 is what you would be using, mostly if they are sole proprietors or partnerships, because an incorporation is completely different. I'm an incorporated company and nobody needs to fill out a T5018 for me because I'm filing my corporate taxes and I'm filing my shareholder loan. So my shareholder drawings. And so that's completely different. So it's mainly, let me clarify that it's mostly for sole proprietors. It's mostly for people that are just making money and they'll making money and they're just going to fill out a T4. And so the T5018 provides proof that they filled out the T4, their own tax filing properly. It's a confirmation, it's a cross-check from Revenue Canada. So yes, let me make that clear that it's mostly for a sole proprietor or a couple of partners that are doing construction on the whole bit. So I would Google, because things change all the time. I could tell you something right now, and then it might change. So I would just Google who qualifies to be needing a T5018. Okay. Does you know what, Corey? I'm sort of coming to the end. I did want to leave a half an hour for questions and all that. I think the main thing I want to say here is payroll is very easy to keep clear, clean, and have an easy year end with T4s. But you still have to look at how things are going behind the scenes. You want to double check that these payroll liabilities, there's nothing outstanding, because that's going to give you heartache as time passes. You want to look at this stuff all the time. QuickBooks is fabulous for this PD7A. It just does the math for you. If I go into Sage 50, it kind of does the math for me, but I kind of like this. I mean, the balance sheet does the math for me in Sage 50 and some other accounting programs. But this one I like because it gives me the employee CPP, the company CPP, employee EI, and gives me the taxes. And that's my working copy. I can print this off and put it to my payment that I made through my bank, and I can staple it together, and I have a record of why I paid my PD7A. And I think it's very important that you know your government rules when it comes to payroll, because stat holidays is an issue, and employees might feel that they're getting ripped off because the stat holidays were not calculated properly. Family Day, by the way, is a stat holiday in Ontario. You have to pay, but not in other provinces. Not in all provinces is it a stat holiday. So again, I do have corporations that have a corporation in Ontario, but then have a corporation in another province, and we have to know both rules. So many corporations are in multiple provinces. So that's another key thing that is know your stat holidays and know how to calculate your stat pay, and know when you do not have to pay an employee if they dodge a shift prior or afterwards. That's cash out of your pocket that you don't need to have cash out of your pocket. know your remittances, know your audits. So here we have source deductions, WSIB, and EHT, which is employer health tax. And you do not have to worry about employer health tax. But having said that, watch your gross payroll. It's pretty high for most small businesses right now. It's at that 490, and then it went to 1 million and 1.2 million. It's really high for most small businesses. So you don't even have to think about EHT. But when it was at the 450 mark and businesses were growing, before they knew it, they were over that 450. And a year or two passed, and EHT finally caught up with them. And next thing you know, $10,000 or $15,000 is coming out of their bank account, because plus penalties and interest, because they weren't paying attention. EHT wasn't paying attention either. They were catching up. And next thing you know, we've got 2 or 3 years where we have issues. And then who wants $15,000 or $20,000 coming out of their bank account because something got behind and didn't get picked up? So with EHT, you just want to watch your gross payroll. But from 450 to 490, and now it's a mill to 1.2 because of COVID, as a pretty big jump that you really don't have to worry about it if you're at the 300,000 mark for your gross payroll. That's a really big jump. Yeah, I mean, it's really not something to worry about. WSIB is what you want with WSIB. It's all about the contractors. You know, you have to include the contractors if they don't produce a certificate stating that they're covered. And that's construction, that's housing, that's renovating, that's all of those types of, and that's anything on site. And so, and I already know that most contractors say, oh, you know, do I really have to have an account? Well, if you don't, the business owner is obligated to put them under their account. That's definitely important to know, because you won't pass an audit when you get called, and then you owe money again. And so it's best to kind of stay up on these remittances and source deductions. I mean, I knew some source deductions is like 2% penalties and interest if you get stuck into the arrears cycle. But if you ignore CRA and you push off an audit and you say, okay, I'll go on an arrears payments, and they'll say to you, as long as you stay current with the ones going forward, so there's a light at the end of the tunnel that you're going to get caught up. But if you don't follow the rules, then your penalty interest, if you're really bad at ignoring them, goes to 20%. So that's a huge amount of money, from 2% to 20%. And I do have a couple of clients that are sitting at the 20% mark, and it's just so much money out of your profit. It's not deductible. So it's so much money out of your profit and out of your pocket that you don't really want to get caught in that cycle. So I'm a fan of having multiple bank accounts. And when you have cash flow, you're throwing money in for HST, and you're throwing money in for source deductions into separate bank accounts, savings accounts. So the money is there when it's due. So I think that's very, very important. Are there any other questions?
No questions written out in the chat. I'm sure if anyone would like to unmute themselves, if they have any comments or anything to share this evening. Of course, next Wednesday, we will walk through using the QuickBooks Online version. So I would assume there'd be some redundancy in the type of content that Sandy will deliver. However, if you are utilizing QuickBooks Online, that would be the great session to join.
Yeah, you know what, Tori? I think there's a break next Wednesday, and QuickBooks
Just
Online,
realized that.
Yeah, is the 27th of October.
Yeah.
And yes, you know, the same content will be the same. It's the process. QuickBooks Online is a different platform, completely different. Tori and I have had chats over the last couple of years that you can't teach QuickBooks Desktop and QuickBooks Online in the same session, because they're just completely different platforms. And one of these days, in the next decade, easily within the next 5 or 10 years, I can see QuickBooks Desktop not being serviced
Yeah.
or supported. And the reason is all this new technology coming out, and they spent a lot of money putting this new platform together. And it's really covering the entire world in the process. You know, they're merging everybody, all countries into this one platform that eventually they probably won't support desktop. When that is, I have no idea. I foresee 5 to 10 years. And that's fine with me. I'm 61, so it's 61. So hey,
Yeah.
whatever.
That's far enough away in the future. Yes.
And I'm a fan of both. I'm a fan of QuickBooks more than any other program. I've been on a lot of them, but it's interesting. Desktop is still my favorite because when I troubleshoot and I can play and I can do things and I rarely say no. And with QuickBooks Online, I say no, I can't really do that just yet, but it's coming, it's coming, it's coming. And it'll be just as good as desktop. I mean, it's got some great things right now with bank feeds and technology and all that. But still, I still believe in the basics of bookkeeping, that we are looking at our reports, we're looking at our accuracy. And sometimes I say, okay, technology is technology, but we still got to make sure it's accurate.
Yeah. Yeah, and you've mentioned a couple things that I'm going to share a couple links here. So the reason why we're actually having a break next week is it is Small Business Week in Canada. And so we are proudly joining Grey County along with several other community partners, including the Business Development Bank of Canada, Futurepreneur, Bruce Community Futures, the Hub located in here on Kinloss, as well as Grey Bruce Catapult on a great series, all free for our entrepreneurs to attend. So I'm going to share the link here in the chat box as well. I'll send it in the follow-up email tomorrow, but really great opportunity to learn a lot. We're starting the day off on Monday with learning about the economic state of Grey and Bruce County specifically. So, and then it'll continue on through really great topics focused on assisting you, lots of learning and engagement just in a different type of way. But in addition to the Small Business Week, Sandy's kind of touched on a lot of really great key points, mentioning a lot about the CRA, tax forms, etc. On October the 25th, we will be hosting the CRA on a tax time session specific for small business, sole proprietors and partnerships. So if you are operating one of those business structures, you can certainly join for that. We won't be recording that as we can't with the CRA, but so if you can join live, that's the best way to go about it. And then in addition to that, we are hosting a human resources professional to walk through a lot of really great steps with regards to Employment Standards Act, what your rights and obligations are as an employer, as well as your employees, hiring tips and tricks, how you go about everything in the mixture of payroll and having employees. So a lot of really great content. Those will all be recorded, but certainly I highly recommend joining live if you can, because you just get so much more value. So those two links there, you'll see the Small Business Week as well as the additional Bruce County webinars. And we have a comment here, Sandy, from Aaron, that this was great. All the payroll tips and tricks was a bonus, and knowing QuickBooks can do it so easily for us, terrific. Thank you, Aaron. That's really great. Love to hear the positive feedback.
Thanks, Aaron.
Yeah, that's really great. So I guess if there's no other questions or comments or whatnot, we can certainly wrap up this evening. So again, I hope you can join us for our Small Business Week celebration next week. And we will definitely see you again the following week if you're unavailable for Small Business Week. But thanks for joining. Take care. Hope you all stay well.
Thanks, Tori. Have a good night, everybody.
Thanks so much, Sandy. Bye-bye.